Hello everyone, welcome to ACE Online. So you all know that we are conducting sessions related to the general studies for the upcoming Railway Recruitment Board Junior Engineer Examination, right? So as part of this initiative, we have already conducted the sessions of various subjects like geography or science and technology, polity. So in this session, we are going to discuss about the revision session for economy, right? So as similar to the previous sessions, we are going to take certain topics from economy and we are going to focus on those topics itself. So we are going to revise through MCQs, right? Before that, I want to discuss few important topics that you need to focus on revising the economy subject, okay? So go through demand and supply curves, demand and supply curves, then various kinds of goods, very important. Then please go through all the topic of national income accounting, national income accounting, that is measuring of GDP, GNI, depreciation, all those things. This is a very important topic. Mandatorily, they will touch one question. Then go through budget, static budget I am talking about. Anyway, current budget you have to go through current affairs. Budget and its components, very important, and its component. Then go through planning chapter, very important. Planning and 5-year plans, 5-year plans. So these are all the most important topics, okay? Not only this, we have few more important topics. These are more important. Then secondary important are inflation. Go through all the topic of inflation. That means what are the different kinds of inflation, how we are measuring CPI, WPI, that means consumer price index, wholesale price index. Inflation targeting, that means what is the policy that we are currently following. Monetary policy committee, go through the inflation topic as well. Then banking related topics, repo rate, reverse repo rate. Banking is very important for railway exams. They are touching it at least one question, right? Then we have planning, anyway we have mentioned. Then international economic organizations, international economic bodies like World Bank, IMF, ADB. So they will ask you headquarters or what is their role and all. Then external sector like balance of payments, external sector. Then most importantly, they will ask you 2-3 questions from this. Economic current affairs, economic current affairs, okay? So like important data, schemes, all those, right? Few current affairs I have taken few questions, but rest of the things you have to go through them clearly, okay? So these are all the topics which they are going to touch the questions. Please revise them. You will get around 3-4 questions, okay? So let's start with our revision session. First, which of the following is a key feature of market economy? So we have 3 kinds of economy, right? Market economy, non-market economy and mixed economy. So out of this they are asking what is the key feature of market economy? Price control by government, centralized planning, free interaction of demand and supply, absence of private property. So out of this, which one is a feature of market economy? See, in a market economy, it is a free supply of goods and services. Free supply based on demand and supply, okay? Basically free production we can say based on demand and supply. So no role for government, no role for government. It is completely handled by the private players. Whereas in non-market economy, government controls the production, okay? Government itself controls the production and supply, prices also. Whereas in mixed economy, both government and private players will have a role. So in market economy, what is its features? Free interaction of demand and supply without government regulation. So this is the key feature of market economy. Next, which activity is part of the secondary sector? So we have mainly three sectors of economy: primary sector, then secondary sector, then we have tertiary, or call it as a service sector. In primary sector, those goods which can be primary sector involves all the kinds of goods which are directly collected from earth. What are all the goods can you collect directly from earth? It can be agriculture, it can be fisheries, it can be crops, it can be cattle, right? It can be mining also. Mining is also very important. Mining. Students get confused. Mining is also directly collected from earth. So remember the definition. Let them give any example, right? Secondary sector includes all the activities, economic activities, where there is a modification of primary sector goods. So we collect the wheat, process it to bread. So processing, wherever there is a processing, then it will be secondary sector. That means we are modifying the raw material collected from the primary sector. And then in tertiary sector, there is no physical goods, no merchandise or physical goods. There is a services, intangible, like tourism, banking, communication, all these are service sector. Now they are asking which activity is part of the secondary sector. Mining is a primary sector, farming is a primary sector. Then textile manufacturing, they are not asking the cotton production, they are asking textile manufacturing. That means we are collecting wool or cotton and then we are modifying into threads. So there is a processing of raw material collected from primary sector. So textile manufacturing is part of the secondary sector, whereas teaching is a service sector. That is tertiary sector. So this is also wrong. So answer is C, right? So we have already discussed the sectors. Then which of the following is an example of intermediate good? So we have different kinds of good: raw material, intermediate, finished good. So what is intermediary good? Intermediate good or intermediary good is the good that is produced from raw material but still needs further processing. We need to still process it. For example, rubber tire. We have made rubber tire from rubber, but still we cannot use it directly in the economy. We cannot make it as an end product. We need to connect it to the vehicle. Then only it will become a final product. So rubber tire is an intermediary good. So that means intermediary good or intermediate good is a good that is produced from raw material but still need further processing. We cannot use it directly. So those are called as an intermediary good. So they are asking which is an example. Let's solve it. Wheat sold in the market. So wheat is a final product. We can use it directly. So this is not an intermediary. Bread purchased by households. Bread is directly consumed. No need of any further processing. Flour used by bakery. Flour means it's a powder. So we cannot consume it directly. Rather, we need to use it in the cake manufacturing. So flour is a intermediary good. This is correct. Milk consumed directly, it is an end product. This is also wrong. So answer is C. Next, which of the following best defines the Giffen paradox? You need to understand the law of demand. What do law of demand says? Demand is done by consumers. So demand is inversely proportional to price. This is a law of demand. That means if price increases, we consume less, we demand less. If price decreases, we demand more. That's what happens in the market economy, right? So if the cost gets decreases, we consume more, we demand more. This is the rule of law of demand. But Giffen observed that whenever there is a crisis like World War, it is not respecting to this relation. That means, let's say there are tomatoes are there. 1 kg is 10 rupee. And suddenly our Prime Minister Narendra Modi ji has come and announced that there is going to be a lockdown from tomorrow and tomatoes price increased from 10 to 30 rupees. But still people rush to buy it because they are scared that that may go to 100 rupees also, right? So Giffen observed this. Even though price increased, demand should actually decrease, but still demand is increasing because of some crisis and external condition. So given goods are those mandatorily inferior goods, they are not luxury goods, inferior goods which does not obey the law of demand. So that situation is called as a given paradox or given goods. Demand increases when price decreases. So when price decreases, demand increases. This is a normal condition, not a given paradox. Demand decreases when income increases. So whenever income increases, demand gets decreases. This is no relation. Demand increases when prices increases. This is what we have taken example of COVID, which is a given paradox. So answer is C. Demand remains constant regardless of price. No, this is also not relation. So answer is C. Next, national income is commonly referred to as. So what is the meaning of national income? What is the meaning of national income? National income means total value of goods and services produced in the economy. So this is the national income definition, which is nothing but gross domestic product. GDP can be measured through income approach, expenditure approach, or production approach, or output approach. So these are the three, right? So please go through those in detail. We are not discussing in a very detail. So we'll restrict to the question. So national income is nothing but the GDP. That is gross domestic product. What is GDP? The total value of goods and services produced in the geographical region of our country. So within our borders, irrespective if the company belongs to India or not, does not matter. If it is produced within our Indian borders, then it is our GDP. So the answer is gross domestic product. Next, factors of production are best described as goods consumed directly, inputs used to produce goods and services, government resources only, natural resources alone. So which one is the factors of production? Factors of production means all the inputs used by the company to produce the goods or services. So there are four factors of production which any company requires to produce. First is capital, that is money. Capital or money. Without money they cannot produce any goods. Second, labor. They also require labor. That means people to work, right? Then after labor, what else they required? Capital, labor. Then we have land. Without land we cannot start any business. We require land, right? Either for service or goods. Then we also required entrepreneurs. Entrepreneurs. Who are entrepreneurs? Owners. They are owners itself, but they are part of our business strategy. So these are the four factors of production, inputs that are required to produce any goods and services, right? So these are four factors of production. Next, which of the following is included in India's GDP? What did we say about GDP? GDP is the total value of goods and services produced in the geographical territory irrespective of the ownership of the company, right? Income earned by Indian in USA? No. Income earned by Indian in USA is not part of our GDP. Income earned by a foreign company in India? Yes. I told you GDP means within our geographical territories. So any foreign company doing business and producing goods within India is part of our GDP. Foreign aid received? No, grants are also not part of our GDP. It is the total value that is produced. So these are not appropriate definition. This is the appropriate definition of GDP. So answer is B. Next, depreciation refers to what? Depreciation means use value. For example, I have bought a textile machine in 2020. Its capacity is to produce 1000 goods. After 1 year, it may not exactly produce 100 textiles, 1000 textiles. It may produce 900, 950. That means its capacity gets decreases because of its use value. So depreciation is also called as consumption of fixed capital. That means nothing but the use value. Whatever we are using the machine or any physical machine, we are reducing its capacity. So that is called as a depreciation. Let's see. Loss due to inflation, no. Decline in the value of money, no, that is deflation. Wear and tear of capital assets, yes, wear and tear means loss of its capacity. Reduction in population, no. So answer is C. Next, per capita income is calculated as, very tricky question, very important also, recently asked in various exams. Per capita income is calculated as, you can pause on, you can answer the question. Gross domestic product divided by total population, gross national income divided by total population, net national income divided by population, net domestic product divided by total population. See, there is a confusion between two concepts, per capita GDP and per capita income. Okay. Per capita GDP means total GDP of a country divided by total population. This is a per capita GDP. Per capita income means net national income. That means after, see, a lot of foreigners works in India, they send back their salaries. Similarly, Indians who are working in foreign, they will send back to India. So we are netting it. So net national income divided by population. So this is the definition of per capita income. So here per capita income is nothing but net national income divided by total population. See, GDP by total population, per capita GDP. Gross national income divided by total population. There is no concept as such. NDP divided by total population. No, there is no concept as such. Right? So answer is C. Next, what is the new base year proposed by central government to calculate a new GDP series? See, GDP can be of real GDP or GDP can be of nominal GDP. That means GDP is nothing but number of goods multiplied by prices, and certain years have a crisis like COVID or Russia-Ukraine war, so the prices gets inflated. So we won't get the real GDP. So when the prices are taken of the current year, current prices, then it is called as a nominal GDP. When we consider the number of goods is same, this year how many we produce, but if we multiply it with the prices of the current year, then it is called as a nominal GDP or GDP at current prices. GDP at current prices. Okay. Whereas real GDP means rather than taking the prices of current year, we select one year where there was no crisis and it was stable. So that year which we consider as a stable year and are reflecting the true potential of a country is called as a base year. Base year. So that is when we measure the GDP with respect to the prices of base year, then it is called as a real GDP or GDP at constant prices. Constant prices. Okay. So this is GDP at constant prices or real GDP. Fine. Now, the present as of February 2026, the base year is 2011 and 12. Okay. But now from April 1, the upcoming April 1 onwards, we are going to have the base year of 2022 to 23. So 2022-23 is going to be our new base year starting from April 1, 2026. Okay. So very important, there is a possibility of question. Next, the article of Constitution that mandates the presentation of annual financial statement at the union level. So they are saying that under which article every year government is mandated to produce a budget in front of the parliament. This can be of polity as well as the economy question. So I have taken from economy perspective. So the answer is article 112. which is mentioned as an annual financial statement. Remember, there is no word called budget in our constitution. It is mentioned as a annual financial statement only. So which is under Article 112. Next, first budget of Republic of India was delivered by whom? So Republic of India, when did India become the Republic of India? January 26, 1950. So first budget was presented in February 1950, right? Republic budget. So this budget was presented by whom? R.K. Shanmugam Chetty, C.D. Deshmukh, Morarji Desai, John Mathai. So it is presented by John Mathai, the first Republic budget. Okay. Next, from which financial year was the railway budget merged with the general budget? Okay. So from which financial year was railway budget merged with the general budget? Earlier we used to have a separate railway budget. You see, Arun Jaitley, when he was a finance minister, he presented finance budget, the normal budget, then he will sit, then Sarbanand Sonowal is a railway minister that time. He used to present the railway budget. But after the recommendation of Bibek Debroy committee, both the budgets were merged and presented as a single budget. So from which year this was presented? So it is C, 2017-18 was the year where we presented the merged budget. Okay. From 1924, when Britishers separated the railway budget, till 2016-17, we presented two budgets, but then it was merged from 2017-18. Separate railway budget in 1924 presented on the recommendation of Mitchell-Ackworth committee. This may be also asked in the exam. Mitchell-Ackworth, he said that as railways has the highest share in our budget, so let's separate it from the main budget. So based on the recommendation of Mitchell-Ackworth committee, we presented from separate railway budget from 1924, but later it was merged in 2017-18 on the recommendation of Bibek Debroy committee. Next question from the budget. The two main components of government budget are, what are the two main components? Tax budget, non-tax budget, planned budget, non-planned budget, revenue budget, capital budget, development budget and non-development budget. So you know, budget is classified into revenue, which is short term. Okay, short term. That means whatever the transactions within 1 year, all the government transactions within 1 year, either giving or taking, it is part of revenue budget. And if it is long term, then it is called as a capital budget. That means all the transactions which are long term in nature. In economy, long term is more than 1 year. So the answer is revenue budget and capital budget. C is the answer. Next, which of the following is not a characteristic of revenue receipts? Just now we discussed the revenue budget. So what are the revenue receipts? Receipts means receiving money. Revenue means short payment. So revenue receipts means all the money received by the government in 1 year, which does not have obligation to pay back. So government need not to give this money to anyone. It can collect directly. So this include tax and non-tax revenue. Tax like whatever custom duty, GST, all this. Non-tax means fines, dividends and all. So which is not a characteristic of revenue budget. They do not create liability. So this is a feature. They are asking not a feature. They do not reduce assets. They do not reduce assets. So let's see. That means what is the meaning of they do not reduce the assets? That means they don't reduce our government assets. Okay. So this is also a feature. That means government is receiving one-way payment. They are not losing any asset here. They are repayable by the government. No. Just now we defined revenue receipts means money which has no obligation to pay back. So there is a no obligation. So this is a wrong. This is not a feature of revenue receipts. So that's why it is a correct answer. They form part of regular income. Yes, it is part of regular income for the government. These three are correct. This is incorrect. So that's why they are asking not. So therefore C is the answer. Next, capital receipts are those. What is a capital receipts? Long term. Capital receipts means those money received by the government now but need to pay back in the future. There is an obligation to pay back in the future, or it may cause loss of assets. For example, Air India. If central government sold the Air India, they will get money. No need to pay back, but it is causing the loss of asset. Still, that is part of capital receipts. So, capital receipts include debt and non-debt. Debt means whatever the borrowings taken by the government. Non-debt means by causing the loss of asset. So, any of these two are part of the capital receipts. So, they are saying, do not create liability. No, it create liability. Create liability or reduce assets. So, this is a correct. Regular income, no, it is not a regular income like revenue. Are always non-debt, no. Sometimes they can be debt also if they borrowed. So, this is the correct answer. Create liability or reduce assets. Next, what is the definition of fiscal deficit? What is the meaning of fiscal deficit? Fiscal deficit is the borrowed money by government in one financial year. I am repeating again, fiscal deficit means the amount of money borrowed by Indian government in that 1 year. So, that means it is a liability to pay back. So, it is a debt capital receipts. Non-debt, no. Even though government lost the assets, they no need to pay back. So, fiscal deficit means the borrowed money which has obligation to pay back, and it was borrowed in one financial year. So, that is called as a fiscal deficit. Now, let us see what is it. Government's total saving, no. Government's borrowing requirement, yes. 1 year how much we are borrowing. Excess of capital receipts over expenditure, no. Total capital receipts minus total capital expenditure, it is not the exact definition of fiscal deficit. Difference between revenue receipts and revenue expenditure, this is a revenue deficit. So, answer is B. Next, taxation chapter. Which of the following is an example of an ad valorem tax? What is an ad valorem tax? Ad valorem tax means tax on the value. Tax on value of something. It is not on the units, it is on the value. Whereas, this is ad valorem tax. Whereas, specific tax means tax on units produced. Units produced. Rather than the value, it is the number of units. That is called as a specific tax. Now, they are asking what is an example of ad valorem tax. Excise duty per litre, this is a unit, not on the cost. Property tax, yes, what is the value of property? So, based on that, we are charging the tax. That is the ad valorem. Toll tax, not on the value, it is just on the distance you travelled per unit. This is also specific. Road tax per vehicle, this is also per vehicle. So, that means per unit. This is also specific tax. So, property tax is the ad valorem tax. Next, what is cess? Best described as. Cess means, cess, you can see the options, you can pause and you can solve. Cess means it is a tax on tax charged by central government for exclusive purpose of something. Education cess, agriculture cess. So, exclusively they need to spend money on these particular sectors only. That is called as a cess. And cess is not part of a divisible pool. That means central government, whatever collected as a cess, will not be shared with the state governments. So, that is called as a cess. So, out of this, which one is a best described as a cess? Imposed permanently, levied only by state governments, embarked for specific purposes, shared between center and states. So, not imposed permanently, it is temporary generally, not with state governments. It is embarked for specific purpose like agriculture cess, education cess, and the money collected will be exclusively spent on this particular sector itself. There is one more concept called as surcharge. What is this surcharge? Cess is a tax on tax, we just described. Tax on tax, extra tax. Let's say I am paying 1 lakh tax per year. Out of that 1 lakh, 1% extra is collected specifically for cess. Surcharge is also tax on tax collected by central government. Both are collected by central government only, but this is not for specific purpose. So, central government can spend wherever they require. Unlike cess, which they need to spend on specific purpose, surcharge they no need to spend on any specific purpose. They can use for whatever purpose they want. Similar to cess, surcharge cannot be shared with the states. It is not part of divisible pool. That means surcharge is also exclusively collected and used by the central government, not for the states. Okay, so that is the difference between cess and surcharge. Next, the concept of differentiated banks are introduced based on recommendation of. First, what is differentiated banks? Differentiated banks means those banks which are catering the needs of specific banking activities, housing loans, industry loans. That means we have a number of banking activities, saving, deposits, loans, FDs. So all those are there, but differentiated banks means they are specifically catering to the needs of specific banking activities like loans, home loans and all, right? So those are called as a differentiated banks, and this was recommended by Nachiket Moore Committee. Narasimhan Committee recommended NABARD and regional rural banks, also regional rural banks. Nachiket Moore Committee, differentiated banks. Rangarajan is a Finance Commission chairman. Kelkar Committee is not related to this. So answer is Nachiket Moore Committee. Next one, which of the following best measures the inflation in India for monetary policy purpose? Monetary policy means, what is the meaning of monetary policy? RBI policy. Monetary policy means RBI policy. Fiscal policy means government policy. Government. Monetary means RBI. Now, RBI decides repo rate, reverse repo rate. There are many tools. For that, which inflation benchmark is taken by RBI? Before 2015, it was WPI, Wholesale Price Index. But after 2015, it is Consumer Price Index. This Consumer Price Index measure inflation at a consumer level. So at the end of consumer, they measure the inflation. So that is called as a Consumer Price Index. So now RBI is taking CPI as a base for doing the monetary policy activities. Okay, so that is about the inflation. Core inflation excludes what? This is a recent exam in UPSC EPFO, Employment Provident Fund Organization exam. So excludes what? See, there are two kinds of inflation based on the calculation: headline inflation and core inflation. Headline inflation means overall, including all the goods and services together. If we measure the inflation, then it is called as a headline inflation. If we exclude volatile goods, what are the volatile goods? Food and mainly fuel. Like we are dependent on the other countries, like Russia-Ukraine war goes, Iran-Middle East war goes. So again, prices will grow, right? High. So that means food and fuel, if you exclude and then measure the inflation, then it is called as a core inflation. So which one we are excluding? That is food and fuel is excluded from the core inflation. Next, the current inflation target in India. See, we have a monetary policy committee. Monetary policy committee headed by RBI governor. It has 6 members totally. 3 are from RBI and 3 are appointed by government, and RBI governor has the casting vote. That means in case of tie, his decision will prevail. So all this, through this monetary policy committee, government is aiming to keep inflation at certain level. Lower inflation is also not favorable because it don't encourage to do business in India, because some inflation will give them to get more profit next year. So let's say we have produced 100 goods and 80 were sold in this year. 20 goods we have sold next year through inflation. We got some profit. Also, higher inflation affects the consumer. So inflation should be only within certain range. That is now targeted by India between 2 to 6% year on year. So what is the target? 4 plus or minus 2% is the current inflation target in India. Okay. Next, planning related questions we have. Planning Commission was set up in which year? Very popular question. In March 1950. It was set up in March 1950 and it was replaced with Niti Aayog. Niti Aayog replaced Planning Commission, okay, in January 1, 2015 onwards. Niti Aayog replaced the Planning Commission, but Planning Commission was appointed in 1950, March 1950. Next, the second 5-year plan is also known as, again a popular question. I have taken mostly of popular previous questions from various exams. Mahalanobis strategy. What is his strategy about? Mahalanobis strategy. We need to focus on heavy industries. Heavy industries plus government oriented. We are not going to allow private players. So it is called as a socialist policy. Socialist policy. So this is his proposals, right? So Mahalanobis plan. Mahalanobis is also called as a father of Indian statistics. So his plan was prepared and followed in the second 5-year plan. So based on heavy industries and socialist pattern of economy. Next, the period 1966 to 69, because in third 5-year plan, when was third 5-year plan happened? 1962 to 67. So in this period, we have India, China, 61 to 66, 61 to 66. In this period, we have 1962 Indo-China war, the 1965 Indo-Pakistan war, and in second 5-year plan, what we have followed heavy industry. So we ignored agriculture. We got the agri crisis. So Green Revolution was started. So this were called as a plan holiday. Plan holiday. That means we have given a holiday for the 5-year plans and we went for year-on-year plans, which is called as a plan holiday. So this period is called as a plan holiday. Next, the 11th 5-year plan aimed at. So 11th 5-year plan, what is the theme of 11th 5-year plan? What it has aimed at? Please go through all the 5-year plans thoroughly. You will get 1 or 2 questions. Faster growth, inclusive growth, sustainable growth, faster and more inclusive growth. Very direct question. It is faster and more inclusive growth is the theme and aim of the 11th 5-year plan. Next, direct benefit transfer using Aadhaar was emphasized in. So please solve this question. Earlier, we used to give a lot of subsidies that to farmers has to wait or consumers has to wait in line and then they need to take benefit. But now, DBT, directly we are transferring the money to the bank account using Aadhaar. So this plan, this scheme was launched in the last 5-year plan, that is the 12th 5-year plan. So quickly I am revising the core features of each and every 5-year plan. Time periods are also important. Okay. First 5-year plan started from 1951 till 56. This aimed at development of agriculture. Second 5-year plan, 1956 to 61, we focused on heavy industries, industrial development. Then 61 to 66, we had self-sufficiency in food, sufficiency in economy. Right, in third 5-year plan, self-sufficiency, that means we should not depend on other countries. We should be self-dependent, right? So that was the core theme of the third 5-year plan. Then we have a plan holiday from 1966 to 69. We had a plan holiday, right? Then in the fourth 5-year plan, we focused on self-reliance and sustainable growth. That means a continuous growth rather than a peak growth. So this is the fourth 5-year plan. Fifth 5-year plan, 1974 to 79, and the main aim is removal of poverty. And we have also got Garibi Hatao slogan. Garibi Hatao slogan also in the fifth 5-year plan. Then we have sixth 5-year plan from 1980 to 85. This is mainly focused on improvement in infrastructure, agriculture and industry. This is the main focus. Then seventh 5-year plan from 1985 to 90. This is modernize of increase in the employment opportunity, modernization of industry and increase in the employment. This is the core feature of 7th 5-year plan. Then 19, you might be aware about LPG reforms or BOP crisis, balance of payment crisis. We went to BOP crisis. Manmohan Singh was the finance minister then, and Narasimha Rao was our prime minister. So they together went with the LPG reforms with the help of IMF. Liberalization, privatization and globalization. So this was happened between 1990 to 1992, which was called as a rolling plans, right? So 8th 5-year plan again started in 1992, which mainly focused on human resource development, like skill, education, all those. Then we have 9th 5-year plan, which started in 1997 till 2002. We focused on rural development and decentralized planning. Okay. So this is the 9th 5-year plan. Then we have 10th 5-year plan starting from 2002 to 2007. And the theme is increase in investment. Okay. Increase in investment. 11th 5-year plan 2007 to 2012, overall development of the people. Okay. This is the main theme. We have in the theme also faster and more inclusive. Then 12th 5-year plan, faster, inclusive and sustainable development. So this was the main concept under 12th 5-year plan. So these are some of the important 5-year plans. Please go through them. So there is a possible question. Next, which of the following institutions were created as a result of Bretton Woods Agreement? See, Bretton Woods is a place in Hampshire in USA. So after the World War II, as the countries got distracted by war, they have met together and they aimed to establish economic institutions. So this is called as a Bretton Woods institutions. Those are IMF and World Bank. IMF role is to recognize all those countries which are distracted in the war and to identify them and give the data to the bank, World Bank, so that World Bank will give the loans. IMF also taken care about the exchange rates. What kind of exchange rate system the countries has to follow, that is also taken care by IMF. And what is the role of World Bank? World Bank aimed to give loans and grants, free money, whatever the countries affected by the war. This identify and control exchange rate system, World Bank gives the loans. Okay. Next, World Bank and answer is B. Next one, the headquarters of Asian Development Bank, ADB, is where? See, ADB was established in 1966 by Japan. And what is the main aim? The main aim is to support the developing and least developing countries in Asian continent. And then later it has expanded to other continents also. The headquarters is in Manila, Philippines. Philippines is the country where there is a headquarters. So Manila is the headquarters. Next, we have some current affairs based questions in economy. Viksit Bharat Guarantee for Rozgar and Ajivika Mission Gramin Act 2005 replaces which act? It was replaced with the Manrega Act, Mahatma Gandhi National Rural Employment Guarantee Program Act 2005. So now earlier it was 100 days, but now it was increased to minimum 120 days of guaranteed employment in rural India only. Rural India, not in urban area. So here clearly mentioned Gramin. Okay. So this act replaced the Manrega Act. Very important, recently mentioned in news. Next, in 2025, Indian rupee has breached which psychological level against the US dollar? So this was the highest ever. It has breached which number to cross the against the dollar? Very important. So this was widely mentioned in news, 80, 85, 88, 90. It has breached the 90, it went even to 92 rupees per dollar. So exchange rate means per $1. It can be dollar or any foreign currency. How much domestic currency? How much domestic currency need to be given? So this is called as a exchange rate. So now this exchange rate of Indian rupee has breached the 90 rupees per dollar. So widely very new. So they may ask you this also. Next, as per India Industrial Land Bank 2025 current affair economy, India has more than how many industrial parks? So how many industrial parks approximately we have? It is again current affairs economy. 2000 industrial park, 3000 industrial park, 3500 industrial parks, 4500 industrial parks, 6000 industrial parks. Now what is an industrial park? Industrial park is a geographical territory where all the economic activities of that particular industry is conducted at a single place. So that is called as a industrial park. So India currently has more than 4500 industrial parks, right? Next, India's global rank in milk production is, so out of all the countries, what is the rank of milk production? India is the largest producer of milk in the world, followed by China. So we are at the top rank, first rank in the milk production across the world. So agriculture data, we are discussing some important ones. Then, which state is the largest producer of eggs in India? So which state is the largest producer of eggs in India? That is Andhra Pradesh. So Andhra Pradesh is the largest egg producer in the world. So again they may ask you this, right? Next one, Rajasthan leads in the production of which product? So Rajasthan is the largest producer of what? They are asking. Milk, meat, eggs and wool. Eggs we have already seen, that is Andhra Pradesh. Meat is West Bengal, UP and Telangana, right? Milk largest producer again UP. Wool largest producer is Rajasthan. So again a very important one. Next, India recently surpassed which country to become the world's fourth largest economy? Fourth largest economy. India is now the fourth largest economy. Who has which country's GDP we crossed? First is USA, second is China, third is Germany. So now India is the fourth. So we have crossed which country? That is Japan. After Japan we have UK. So UK last year itself we have crossed. Now we crossed the Japan also. So answer is Japan. Next, GE, a premium metal credit card has been launched by which bank? So this can be connected to the current affairs as well as economy. So current affairs anyway, we are conducting lot of sessions. So please go through them as well. So lot of questions will come from current affairs as well. So which bank has launched the GE premium metal credit card? That is IDFC First Bank. This bank has recently launched the GE, a premium metal credit card. Okay. Next, exports contribute nearly what percent to India's GDP? What is total India's GDP? Around 430 lakh crores. And whatever the exports, that means goods, whatever produced within India is part of our GDP. And whatever the exports we are selling, what is the value? X divided by 430 lakh crores. What is the value of total exports? Divided by 430 lakh crores into 100. Then we will get the percentage of exports to our GDP. Now out of this, how much they have asked? 15, 18, 21, 25. So what percentage of GDP is going for our exports value? That is 21%, right? Next, RBI official podcast series launched to improve public communication is titled as. So RBI has recently launched a podcast. That means they will come up with a lot of sessions. They will discuss about the economy to directly interact with the people. RBI speaks, Paisa Path, RBI talks, Paisa 2 policy, monetary minutes. So what is the podcast? The answer is RBI talks, Paisa 2 policy. So this is the recent podcast series that RBI has come up with, right? Next, India overtook China to become the world's largest producer of which goods? So India in 2025 is the largest producer of which good? Overtaking China. Wheat, rice, sugar, maize. Wheat we are second largest. Rice is the one which we crossed China recently. So even we crossed the China and we became the largest producer of rice in 2025. Very important question. Sugarcane, largest producer is Brazil or Cuba. They are changing frequently. In 2025 it is Cuba and India is the second, right? So we did not cross China as such. Maize, largest producer is USA, not India. We are in the 5th rank or 6th. Okay. So answer is rice. So this is about the Indian economy session for RRB-JE. I hope you have enjoyed and learned something. So whatever the topics we have discussed, please go through them, revise them, and if you have any doubts, you can comment in the comment section as well. So thank you. All the best for your examination.